AMD just released their latest quarterly figures and the call just ended as well. The stock at the time of making this video is up 7% or so. Revenue beat, guidance was raised a little bit, EPS was met / slightly missed on a GAAP basis, same with gross profit margin. Now, is it warranted? Was it such a good quarter that the stock deserves to be up 7.3%? Because right now, as you know, these are the valuation metrics: forward PE, EV to EBITDA, price to sales, price to free cash flow. All of those are close to or higher than its 5-year mean. But then if you look at what's going to happen or the expectations of, price earnings to growth sits at 0.79. Could say very, very cheap. Year to date, right now with the after hours action, stock is flat-ish. Year over year, it's going to be up around 25% or so. It has a market cap of over $225 billion. And so while right now you could say that a forward PE of 34.6 times is expensive, especially if you look at the last 12 months, the PE there was 201.6 times. So definitely the company is growing and becoming more and more profitable. As you can see from the analyst estimates, EPS is expected to outgrow sales growth by quite a lot in fiscal 2024 and fiscal 2025 and 26 as well. So what has happened this quarter? What was mentioned during the earnings call? We're going to go over all of that in this video. Plus, next one will probably be about Microsoft. Microsoft is down 5 to 7% or so. Took Meta and Amazon down as well. Amazon is reporting and Meta, both of those companies are reporting later this week. So it might be a little buying opportunity before the earnings. But as always, this is a type of gamble because we are now in a period where a slight miss or maybe meeting expectations is not enough. Plus, on Wednesday, Jerome Powell is speaking, so that might also impact many companies. So stay tuned for all of that. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/investor. Thank you very much. So let's start with some comments by Lisa Su and the CFO. We delivered strong revenue and earnings growth in the second quarter, driven by record data center segment revenue. Our AI business continued accelerating, and we are well positioned to deliver strong revenue growth in the second half of the year, led by demand for Instinct, EPYC, and Ryzen processors. The rapid advances in generative AI are driving demand for more compute in every market, creating significant growth opportunities as we deliver leadership AI solutions across our business. AMD executed well in the second quarter with revenue above the midpoint of our guidance, driven by strong growth in data center and client segments. In addition, we expanded gross margin and delivered solid earnings growth, while increasing our strategic AI investment to build the foundation for future growth. And so, for the quarter, revenue increased 9% year over year and 7% quarter over quarter. Gross profit increased 17% year over year and 12% quarter over quarter. And we're going to see that trend continue. So gross margin, 49%, that's up 3 percentage points year over year and 2 percentage points quarter over quarter. Operating income, of course, year over year comparisons here doesn't make that much sense because last year it was a loss. It's up 647% quarter over quarter. Operating margin, 5% compared to 0% in Q2, same quarter last year, and just 1% in Q1. So yes, if you look at just the comparisons, I've seen some people already say, oh, this is amazing, the growth. I mean, for the price that you're paying to buy AMD, this is the least that you could have expected, right? Continuing here, net income, $265 million, up 881% year over year and 115% quarter over quarter. Earnings per share, 16 cents. This is, by the way, on a GAAP basis, up from 2 cents same quarter last year and 7 cents in Q1. So this is why you've seen the price earnings to growth at 0.79 and the forward PE at 34 times. The company is becoming more and more profitable, but taking into consideration the, let's say, low earnings. The company is becoming more and more profitable, or at least they're indicating that that's the case. So take all of that into consideration. Yes, right now forward PE might look more expensive than usual, but it is growing. So as long as the stock does not go up so much, valuation-wise, it should come down. Now, as for the different segments, so of course, big increase here in data center revenue and operating income. Year over year, 115% increase for net revenue and 405% for operating income. Quarter over quarter, that has increased quite nicely as well, up 21 and 37% respectively. As for the client one, same story there. Of course, we've got still some weakness in gaming and embedded, but data center, you can clearly see that this is becoming, just like Nvidia, the largest part of the business, although they are expecting client to perform quite well in Q3 and Q4 as well because of the rise or refresh cycle. There's a rise of AI PCs, but also the desktop refresh cycle. As for Q3 outlook, they expect revenue to come into around $6.7 billion, which is a beat by 1.5%, and gross margin 53.5%. The guide missed because they were expecting 54%. They did also say that Xilinx amortization is hitting overall GAAP margins. Now, during the call, they did say that the MI300 will continue to ramp up in Q3 and Q4. Guidance from that has been raised from $4 billion to $4.5 billion. And remember, last quarter, they also raised it from $3.5 to $4 billion. So now the question is, will they do it again in Q3 and maybe even Q4? Lisa Su said that supply chain remains tight to 2025. And of course, like I said, the client segment will benefit from launches of AI PCs and new desktop launches. But again, the question remains, they're ramping up. MI300 guidance has been raised. Guidance for next quarter, $6.7 billion, with everything that's been happening right now with, let's say, AI demand or demand surrounding everything that has to do with AI. Did we not expect a bigger number? Because next quarter, it's expected to be $6.7 billion. This quarter, that was $5.8 billion. So yes, quarter over quarter, also a nice increase. But should we not have expected an explosion in growth? I'm just saying this because we've seen that happen with the likes of SMCI, with the likes of Nvidia as well. True huge demand that can be seen quarter over quarter. In this case, with AMD, although on most metrics, they are improving year over year and quarter over quarter quite nicely. But that's also why you're paying the price for it. So I'm a bit conflicted here. Again, AMD, good company, good leadership, but maybe I was expecting a little bit more. And so right now, if we're looking at the graph, stock is at $148.4. After hours, of course, a lot can change when the market opens. It still sits under the 200-day moving average, which sits at $152. There has been some selling pressure. Well, there has been some pressure around semiconductors in the last couple of weeks, which is why you're seeing those 3 red candles. Of course, tomorrow, if the current price holds, this one is going to be a green one. And then Jerome Powell speaks. Things can change up or down. But yes, AMD has come down from the highs here in March to around 225. So it has come down quite a lot in the last couple of months. Is it the bottom? Is it a good time to buy it? Only time will tell. I will say the same thing I've been saying for a while now. If you can buy Nvidia on the dip, why even bother buying AMD? That's not to say that AMD is not a good company, but valuation-wise, let's actually compare it for a second. So right now, you've got AMD at 34.6 times forward PE, Nvidia at 35.3 times. EV to EBITDA, AMD at 32 times, Nvidia 28.8 times. Price to sales, AMD at 8.2 times, Nvidia way higher, 19.5 times. But then you look at price to free cash flow. AMD, those are last 12 months metrics, so I expect those to come down. That's still at 190.9 times, whereas Nvidia sits at 64.8 times. Price earnings to growth here, again, AMD is cheaper, but Nvidia is not expensive at all, at just over 1. And Nvidia, we know, is the leader. We know has higher margins as well. So yeah, I'm still asking the same question. Why not just stick with Nvidia if you can buy Nvidia when it dips? Because Nvidia did go down around 20%. Of course, now after hours, it's up 4% thanks to AMD's commentary, but it did go down 20%. So yeah, I think it lost $1 trillion in a market valuation. So that's something big. But overall, yeah, good companies. If I had to choose, I will probably still choose Nvidia. That's just me, of course. Do share your thoughts and opinions down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.